Welcome to Global Risk Community Chat. Today our guest is Shannon Shallcross. I'm very happy to have you here today, Shannon. Welcome.
Thank you. It's great to be here, Edja.
Yeah, likewise, thank you for joining us today. So before we jump right into the topic, can you briefly introduce yourself to our audience?
Sure. So my name is Shannon Shallcross, and I'm an executive leader and company founder in the insurtech and data tech space. So I started the first 12 years of my career running sales and service operations across the country for Amica Insurance, which is a national property and casualty insurer based in the United States. And then for the past 6 years, I've been CEO of a data science company that I co-founded that's currently under acquisition. And over the past decade, I've advised dozens of Fortune 500 companies on their data strategy, as well as insurtech startups as entrepreneur in residence for Brown University's B-Lab Accelerator, as a business mentor for RiHub, and as a judge for the Cox Business Get Started Rhode Island pitch competition. So after getting my Master of Science degree in insurance management, of all things, my roots in insurance and data science actually recently collided, and I joined an innovative Silicon Valley startup called Pinpoint Predictive. And they use big data, AI, and behavioral economics to accurately predict unpriceable risks for insurance companies. So all of that is to say, it's a really exciting time to be part of technology transformation in the insurance industry.
Sounds super interesting, also like very diverse, very exciting. Congratulations with the acquisition and everything. Sure must be exciting times. So with that being said, then let's get into the topic. What would you like to share with us today?
Well, in the insurance industry, there's a phrase that's been held closely for a really long time. And that phrase is, there's a rate for every risk. And this assumes that an insurance company's rating plan and underwriting guidelines can ensure that every rate is perfectly priced to cover the cost of every risk, and that rate builds in a reasonable amount of profit. However, if this were actually true, that there is a rate for every risk, every single insurance company would have amazing loss ratios and they would be profitably growing year over year. And unfortunately, that simply is not the case. But here's my question to challenge, there's a rate for every risk. Does an insurance company have a rate for someone who is going to file a six-figure claim in their first policy period? Do they have a rate for someone who is going to end up committing fraud, insurance fraud? Or do they have a rate for someone who's going to end up suing the insurance company? These are all things that are super high dollar. They involve a lot of time and resources. And that's usually not considered when you're thinking of overall risk selection and rating. There really is nothing that can cover those types of things. So these are the types of risks that we refer to as unpriceable risks. They're a small number of outliers that do severe damage to an insurance company's loss ratio. And what's worse is that it drives up the premiums for their good customers. So it's just really not good for anyone. In short, unpriceable risks are just not good for the insurance business. So it would be nice if we all had a crystal ball to be able to predict the future. And any insurance company is looking to understand right away the nature of the risk that they're insuring. And the more accurately they understand this, the better suited they are to price the risk. So I have to give actuaries and data scientists a ton of credit because they have been data-driven in insurance for decades, long before data was a cool word for people to be tossing around. But even despite all of these efforts by insurers to adequately segment risk and price risk, no one has been able to have that crystal ball, which tells you with 100% certainty what is going to happen in the future. What type of risk is this? Who is this person? And what is this going to turn into from a bottom line standpoint? But I will say that thanks to big data and artificial intelligence, we are getting very close to having that crystal ball, closer than we ever have been before. So I want to share with this community something that I see as a huge opportunity today for the insurance industry. And the opportunity is that the insurance industry can learn from top performing companies in the world about how to better use data to avoid these unpriceable risks. So if you take a look at the highest performing companies in the S&P 500, they're all algorithmically driven. Think of companies like, your Googles, your Facebooks. These are companies that use such a large volume of data points, and they use these data points to make predictions in real time. Think about it. How is it that these companies can be so laser focused with the way that they use data that they know me and you and what we like better than our own friends and family? It's almost scary. But the answer is simple. They're using thousands of data points about me, about you, and they're using it to make predictions with a level of precision to the point where they know what I want even before I know what I want. They're using big data, they're using AI, and also they're using a very specific kind of behavioral data. And this is data that actually assesses the person that they're trying to make a prediction about. And it also assesses what actions you may likely be taking in the future. So my big headline here is that if this approach is helping some of these most successful companies to be successful, the insurance industry can and should be leveraging these capabilities as well.
Yeah. I think you actually touched on a very good topic in the sense that, especially on the risk side as well, we hear a lot about like unknowns, like, the known unknowns. And I think on the insurance that also kind of relates to that with the unpriceable risks, because I think they are all connected, and surely AI and other technologies such as machine learning is surely, I think, helping with that as well. So with that being said, I want to ask you, if you were to give some takeaway points to our viewers about this, like if they can implement something regardless of if they are in a big company or a small company, what would you recommend them to do?
Yes, that's a really good question. This is really the message from every one of the big four consulting firms for the insurance industry right now. It's a huge opportunity, and the companies that leverage this first are going to be the ones who end up winning out against their competitors. So the new normal for insurance companies is to gain access to more sophisticated big data, behavioral data, and to use advanced AI to harness the predictive power of this data. This is something that traditionally for the insurance industry, they have not done before. They've just been looking in the past and taking a look at all of the things that they've found in their rating plan and in data that they collect that shows that there's a correlation between a certain risk profile and types of losses. But the industry as a whole has yet to leverage this type of behavioral data. And I'll say with companies like mine, Pinpoint Predictive, we are working with a repository of almost 1 trillion different data points on 260 million Americans. And this is information that is out there. And once you apply deep learning to that, which is basically a type of AI that gets better and better over time as you feed it more data. So the technology itself continues to improve with the more data that it gets. And it doesn't matter whether you have the most sophisticated data science group in your company or whether you don't even employ one data scientist. It's very easy to partner with outside companies such as Pinpoint Predictive to be able to leverage these types of things, even if you don't have a huge data repository, you don't have a lot of records, or if you don't have the people who could actually make this happen. Outsourcing it makes it really possible.
Yeah. Sounds pretty good. And with that being said, I just want to ask a very short question, and that is how it is for you to be part of risk committee. Of course, you are more in the insurance end, but if you have like a short comment on that, that would be great.
Sure. My parting comments are this. The success of the risk industry has historically been based on conservatism. But this doesn't mean that we can't leverage emerging technology to win. So actually, in the last 15 years, 52% of Fortune 500 companies have disappeared. If you take a look back at what the landscape looked like in 1955, corporate life expectancy was 75 years. And the leading companies were stable, tried and true. People thought that they were going to be around forever. But when you fast forward even back to 2015, the average corporate life expectancy was 15 years. 15 years. So this is a cautionary tale to every company, risk community included, that the speed of change in our markets is incredible right now. And the message for any company is that to survive in the future, it's imperative for us to embrace rapid change. We have an incredibly robust opportunity right now with the powerful tools that we have at our fingertips in big data and in deep learning. These are the tools that are market proven. They result in loss ratio improvement. And the companies who are winning in the insurance industry are already using these tools. And really, there's no reason why anyone else should not be using them as well.
Yeah. Thank you for that message as well. I think it's a super powerful message, not only for our community, but in general as well. So with that being said, I want to thank you so much, Shannon, for joining us today and sharing your expertise, a lot of things that we should be also predicting when it comes to, like the technological advancements or even trends on that end. So thank you so much.
Thank you, Edja.
And have a great day.
You too. Thanks.